additional push to the frontline index, and as a result of which the bulls are thumping ahead right now, near 300 points on the Nifty. Speaking about IT, we have to go to Reema. Reema, it has all started with the performance that Infosys made this morning in terms of stock price, even though the company missed the fourth quarter performance. What do you make of this?
Well, as you rightly pointed out, Q4 was a miss. The FY23 guidance at first look at 0 to 3%, you would say is lower than consensus expectation. But what the street was fearing perhaps was a lot worse. So look at what JP Morgan has to say about the FY26 guidance. They say it's below prior expectations, which were set 3 weeks ago. But it's better than the recently feared post-tariffs and the uncertainty impact flagged off by Wipro's print. Remember what Wipro guided for Q1. Citi too says the guidance looks decent in the current backdrop, though the higher end does look a little aggressive to achieve. But don't forget, the Q4 was a miss. The company's top line declined by a sharp 3.5%, though margin performance was a saving grace. But many brokerages, in fact, 70 to 80% of the brokerages have a bullish view on Infosys. Many of them have it as a top pick. So Kotak says they expect a muted performance in FY26 on account of the uncertainty. And considering that Infosys has a higher exposure to discretionary spending, it makes Infosys more vulnerable than the other peers. But given the company's strong positioning in cost takeout deals, basically cost optimization in the face, vendor consolidation and AI, they believe the company will be able to weather the storm. They have a buy target price 1700, lower compared to the 1800 that they had before. Jefferies buy call 1660, JP Morgan overweight call target price 1800, HSBC target price cut, but it still stands at 1700, and similarly for Nuvama too.
Well, if HDFC Bank and ICICI Bank could be categorized as boys played well, Infosys has joined the party as well. But